Welcome to this episode of Skipton Talks, and today joining me on the sofa, I'm delighted that we have Steph Charman, Chief Executive of AMI, the Association of Mortgage Intermediaries. Welcome, Steph.
Thank you for having me today here, Paul.
And thanks for bringing the sun with you as well.
It's very sunny today. It's beautiful.
It's not been here for a while. Let's get straight into it. Okay. So, really interested in some career change for you. So, tell us a little bit about your career history and what in particular, what interested you in the top role at AMI?
Gosh, yeah. So like a majority, I'll take you back just a little bit because I don't have a massive career history, many years, but a couple of roles. I left school, college, planning to be a doctor. I took a year out, wanted to go travelling. So my mum said to me, you need to get a job because I'm not paying for you to go travelling. So you need to get a job. And I went and worked in a local life insurance company. And funny enough, seeing I'm sat here now, I didn't go travelling and I'm not a doctor.
So straight into the industry?
So life insurance. And then my first job into mortgages was when I went and worked for a mortgage advisor for a local bank. And then I stepped into intermediary distribution in a role for another network down on the South Coast. And I was there 16 years doing a whole variety of roles, right the way through from sort of, advisor support into distribution, into marketing, partnerships and propositions, which took me to Sesame Bancorp Group. So I did 16 years there and then into Sesame Bancorp Group where I was there for sort of just over 7 years, working through, again, partnerships, propositions, strategic relationships, marketing, etc. Then very, very recently I've joined AMI as the new Chief Executive. And I think for me, the one thing, AMI is absolutely passionate about advocating for advisors. Mm-hmm. We are still navigating and will always continue to navigate, uncertain times, uncertain economic conditions, increased regulation. And actually what AMI do is put advisors at the heart of everything. And for me, that's always been something that I've been passionate about. Yeah. So actually being able to take over, I can't fill the shoes of my predecessor at all. So it leaves a fantastic legacy, Robert. But what I can do is take it in a new direction, evolve that, but still keeping to that core, those core advocates for advisor needs.
So that's quite interesting. So you've done a broad range of roles in our sector, in the advice sector. And now you've an opportunity to go into, influence the direction of where our markets go to a degree. Interestingly, you mentioned putting the advisor at the heart, or the advisor at the heart, because 90% of mortgages in the UK now come through an intermediary. We've had some interesting years over the last few years. Yeah. Let's just say that. But in particular for 2025, what do you see as the key challenges, but also the key opportunities for the sector?
I like the balance of that question, actually, Paul, because I think, sometimes we can really quite into the challenges in the sector. And there are a few, there's short and medium. I think there's short, medium-term challenges and longer-term challenges. But there's also quite a bit to be optimistic about. So I think it's really good to touch into that. I think short-term, we're still facing an uncertain economic backdrop. It would be lovely to say that all that sort of resolved itself and the government are very much going for growth, and let's hope that continues. But there are still, there's still things that are very uncertain. Not just advice firms, but actually the advice sector altogether is still embedding consumer duty. We need to raise awareness of customer vulnerability. Advisors are still facing rising business costs against the backdrop of a market that's been heavily refinanced and even more so product transfers, which has obviously impacted income. So I think that's still, some of that is still to play through. I think then if we look at longer term, there's work that is being done today and needs to continue today around how do we attract diverse new talent into our market? Yeah. How do we make sure that we are looking at technological advancements in the right way to help us augment our processes or make what we do, how to support advisors as opposed to seeing it as a threat. But we need to start that journey now because otherwise those things are going to come over the hill quite quickly. But I think there is lots to be optimistic about. So from my perspective, I think, the housing market remains resilient. I mean, who'd have thought through COVID when we were saying, you can't move, you can't do anything. Actually, advisors, they're such entrepreneurs. They pivot, they move to product transfers, they move to protection. And actually the market itself has remained resilient. And I was really buoyed by, what we saw from, some of the larger online estate agents reporting that Boxing Day listings were some of the highest they've seen since 2011. I don't think that activity is fed through to advisors just yet, but it definitely shows that actually it shows more around customer sentiment. And obviously that's one of the first pieces we need to dip to. The customers are more positive about looking to move, then we'll move forward. And then, I'd be keen to get your views actually on, we see gross mortgage lending up, we see bank base rate reductions.
Yeah.
Just a generally more positive year as we come into 25.
It feels the narrative is more positive. So let me do positive first and challenges. So I'll reverse my own question because I can. So let's do challenges first. So I think, let's do positive first. So I think absolutely the narrative is much more positive. We're talking about increased size of the market. We're talking about more activity. And I'm interested in your comment on technology. So where will distributors and firms, where will they apply their focus from a technological point of view? Because we have talked about it for a few years, but it feels like there's been quite a few announcements recently, and firms are starting to kind of put their money where their mouth is in terms of technology advancements, which I think is great. One positive, I think, for intermediaries, which might challenge lenders a bit more, is the switch from PTs to Remo, and it's a big maturity year in 2025. So to what degree do we see PTs reduce and remortgages increase, and then lenders obviously need to probably be a bit more competitive from that perspective.
Which we hope you will be.
Oh, absolutely. Yeah, you heard it right here to camera. You heard it right here. But we will all make the right decisions about what business volumes we want to generate, but also what support we can give to the intermediary as well. So Remo versus PT, I'm interested in where that plays out. Housing stock, I think, is still an issue. And I'm interested in how that progresses throughout the year. The positive conversation about the housing market is great, but for me, as usual, it's first-time buyers. So we absolutely have to work with first-time buyers to help them to understand the value of advice. But also, I think there's an expectation management, because we do see in our data quite often the expectation of a first-time buyer property. What property do I want to buy versus what property can I afford to buy? So I think there's some challenges around that as well. Next question: How would you like lenders to work better with your membership?
So I think, first off, I would say the majority of lenders work incredibly closely with intermediaries. So I think I think that should be recognised. I think that's right the way through from sort of day-to-day support, which has adapted, hasn't it, as we've come out sort of into a world post-COVID. What does that look from a hybrid perspective? Right the way through to, the initiatives that there's cross sort of trade body collaboration on, such as ED&I and Green. I would say it's not all about product innovation. I think there is a piece around, one, going out and listening to advisors' feedback around systems and processes and the friction that is in some of those journeys. Because actually, small changes can actually make a big difference. If every single lender made small little changes to the barriers that advisors experience on a daily basis, imagine what that would do to an advisor productivity. So I think actually there's some real efficiency gains and productivity gains to be made from just being really open about systems and processes and the friction within those. Okay.
That's quite good from our perspective, because we'll do some work this year on understanding where some of the pain points are from our perspective. So that's quite timely. For me, I think we need to maintain open and honest dialogue. That's really, really important. And that doesn't mean we're always going to agree, but if the right level of challenge and conversation is going on, but we agree to support each other, then that can't be wrong.
No, I don't. And I think there's so much of that there already. And I think one of the things I've been really pleased to see, and Skipton really led the way on this, is actually utilising your business development support as well. So that field-based support that you've got out seeing advisors, that's had to adapt, it's had to change. And I think it's around, a lender that can approach that from it's not one or the other. So it's not you are segmented into this. I think that's really important for advisors as well, because a larger business might want hybrid support. A national firm might want telephone support, and a smaller firm might need face-to-face.
Yeah.
And actually, it's that flexibility around that is really, really important.
Yeah. I've actually been out this week. I went to see a firm who had a number of new starters in the room for part of their induction process, and we were invited to come and talk about Skipton and the proposition and what we've got to offer. And it was fantastic to see so many new and, dare I say, slightly younger faces in the room that were really interested in what we were trying to do, what we were trying to achieve. So that was great. Okay, next question. New role, new Steph, priorities for 2025.
So hopefully not too new a Steph. I think hopefully what I'm bringing is, my passion and my experience and, all of that to the role. However, I think, so first off, you look at your 90-day plan and you'd go to, I want to obviously spend time with the team, a fantastic team, existing team at Amy, obviously spending time with my predecessor on handovers, time with the exco, time with the board, really getting to understand the business and embed into the business. However, all of that, that's a given. What I really want to do is listen to the membership.
Okay.
So I really want to hear what do the members say. What are they facing day in, day out? There's nothing like actually getting, to the real heart and core of their business to really understand, what are their challenges? What are their frustrations? What do they need help and support with? And I think then my priorities will be shaped around what are their priorities. Because actually their priorities are what drives Amy's purpose.
So does that mean actually getting out
Getting out
and sitting down and face to face?
100%.
Eyeball to eyeball.
Because I think you can hear something, can't you? How many times, I know I've definitely done this with my team, it must really frustrate them, that they'll tell you something and, we need to look at this area, we need to fix this. And actually you go to an event and an advisor says, you really need to fix this. But for some reason it resonates, nothing to say wrong with my team, but it just resonates more when you actually hear it from, the real crux of the matter, I suppose.
Yeah.
So that's for me what I want to get out to. Get out, speak to the advisors, actually listen, feel their passion, and then draw my priorities from that.
Okay. So I guess as lenders, we'd be interested in how do you collate that information? How do you break it down into themes, and how do you get back to us?
Oh, I'll be coming back to you, Paul. Don't you worry about that. There will be a list.
Episode 2.
Yes.
Yeah, we got it. Brilliant. So. I got one more question for you. I don't know if it's unfair or not, but I'm going to ask it anyway. So if you could change one thing in the industry, one thing, what would it be?
This is one of these, if you're Prime Minister for a day or if you had a magic wand questions, isn't it? They're really difficult to answer. Yeah. I don't have just one thing, so I'm just going to, and I've got the mic at this moment in time, so I'm going to continue.
Go for it.
So I think there's quite a long list. I think there's things around, streamlining the mortgage application journey. There's reimagining the conveyancing journey, which some of these are already in place in train. Increasing protection conversations, infrastructure to, around house building targets. There's lots of, right sizing a property, better social housing. God, I've got a list and a half here. I think one of the things for me, however, is I think what we need is long-term government strategy around the housing market. So I think that's the one piece that if I could change is how do we have maybe an agnostic, or cross collaboration across government with a longer term strategy.
Okay.
So
that's the one. In my rules, that's the one that you want to.
Okay, that's the
You can have all the other stuff as well, but that's the kind of big one from a consistency.
Yeah, I think that, and also I think we need to recognise that that's a longer term goal. So that some of those things aren't going to fix things today, but if we don't want to fix this sector and future proof this sector for the long term, then we need to start having those conversations today. It's an unfair question, but I'm going to ask it back. What's your one thing, Paul?
Yeah, I think I agree with the last point. So everything you've said is absolutely 100% agree. But for me, there's a piece around continuity and consistency where policymakers actually, and I'm going to use the words, take our industry seriously, because we're about enabling people to live in their own homes, right? That's what we're all trying to achieve. And that's really important from the consumer's perspective. It's really important from our industry perspective. And I wonder sometimes whether or not it's as important at the policymaker level. So my one wish would be create the right commitments, create the right environment, and stick to them, and help us to help the customer own their own home and live in their own home.
I would agree, because home ownership is so important, and we are a country of wanting home ownership, and I hope we don't lose that, and we don't go to sort of more sort of what we see in European markets. But I also think, to your point, I think we're right on the same thing. It's that collaboration as well. So collaborate with lenders, collaborate with trade bodies, collaborate with advisors, so we make sure that actually those, whether those initiatives or the longer term goals actually are right for the market.
Right. That's a proper serious point to end the conversation with. I'm just going to wish you good luck.
Thank you, Paul.
In the new role. No doubt we will speak again very, very soon. Steph, thanks for taking the time to join me on the sofa today. Thank you for watching this episode of Skipton Talks. If you enjoyed our conversation, please subscribe to our channel. You can see all of our previous conversations, and subscribe so you never miss a future one. Thank you.